Hey, Mike, let's make a start if that's okay with you.
Yeah, good. That's nice to see you, Paul.
Yes, you too, matey. Obviously, in terms of areas of life that we put off, I think insurance has got to be in the top one. Um, so I think it's really important that we produce something on this that covers the key points. Obviously, going to talk today about some of the topical areas as well, some of the things that have been thrown up during and post COVID, and some battle scars, if you like, and some stories of where it's gone wrong, and also just give a bit of practical advice about how to get the right things in place, the right cover at the right price. I'll stay through without Mike and ask questions if that's okay. But otherwise, the screen is sharing, so all good, and over to you.
Yep, sounds good. And yeah, I can't understand why anyone would think that insurance isn't the most exciting thing in the world. I mean, I live and breathe it. It's fantastic. Anyway, today we're going to just chat about the basics regarding agencies and insurance, and by that I mean commercial insurance, so not the personal insurances such as life insurance and key person. That would be something for your IFA. So let's get cracking. So me, Michael Henderson, founder of RiskBox. Hopefully a few in the agency sector will now have heard of us. I've been in insurance for a long time. I can't get out. I mean, once you're in for 2 or 3 years, I think that's probably it. You're a lifer. But around about 10 years ago, I decided that I didn't really want to work in the industry the way that I was. There are a lot of drawbacks in the way that insurance is set up and so forth that I don't think really makes it easy for clients. So 10 years ago, RiskBox was set up, headquartered in Manchester, but we deal with clients all around the UK. We are independent, unlike some other agency, some other insurance brokers. We are not owned by an insurer, which is quite often hard to know, but there are quite a lot that are. So when they decide that, the best deal is with X insurer, maybe it is, maybe it isn't. We focus on certain niches, and the reason we focus on the niches we do is because purely and simply they're areas that I like. So we focus on agencies, we focus on tech, we focus on media, entertainment, the fun stuff. We don't focus on motor traders, taxi companies, scaffolders or anything. Not that there's anything wrong with them. They are good businesses that just don't interest me. But as a result, because we've been able to stay niche, we try to make sure that we know what we're talking about, and our client base will generally be around that sector. And similar to like MAP, it means that we get insights across that sector, which we can share when we look at new agencies that we talk to. And as well as that, we sort of try to make sure that we give a sort of a very personalized service. So we don't just abandon you. So if we get you your insurance arranged and something happens, something crops up, you've got issues with a contract, you've got grumbles from a client, whatever, we want to know about it. We want to help you, and you don't get charged for that. Whereas, as I say, some of the brokers don't do that. Anyway, that's that bit done. That's a waffle sorted. Let's get cracking. So what's the state of insurance right now? Not great. There is still a bit of a sort of a legacy from COVID, where some of the insurers continue to struggle. There's still a bit of uncertainty. So they still don't quite know what potential losses they will be. And we're not talking about the COVID business interruption thing, which I can go on for a long time about, because I wrote a 25-page document, which I sent to the FCA, which I don't know if they use, but for the case. But yeah, so it's not about stuff like that. It's about across the entire piece. You've got, obviously companies going under. You've got, issues with companies, whether they're solvent or not, with things like CBILS and so forth. And if something happens, then it could be subjective, and there could be all sorts of different things that could be years to develop down the line. So there's still a fair bit of uncertainty for insurers with the post-COVID market. Then this is something I really want to write a blog on, but it's a real struggle to get how I write it. But essentially, we all see that the things such as AI are going to be useful. We see things such as chatbots, we use them, and all sorts of different things. We see the efficiency of trying to make things more automated and so forth. We get that. However, what we found with insurance is there's been almost like a race to the finish without actually thinking things through. So they're trying to do a lot of these things too quickly. Now, what that means for you is it means that quite often you will find that you will not get the service, or obviously through ourselves, you will not, it will be a case of service will be a problem. And sometimes silly decisions will be made, and things will take a lot longer than they actually should do. And that's a flawed issue with insurers. And it's also partially due to them being initially not particularly capable for hybrid working and so forth, unlike, most agencies that we know. They're tougher on claims as well, so they'll ask a lot more questions. They will potentially reject things. And something I suppose which is a key thing to always remember is, despite all the advertising, how nice they might look on TV and so forth, an insurer is not your friend. They're a business, and you cannot rely on them to do the right thing, which is partially why we come in, because if they need to be pressured, if they need to be metaphorically kicked, that's what we're here for. And the rise of the cyber attacks, we've seen a lot of cyber attacks over the last 2 or 3 years, particularly regarding ransomware, which we'll touch on again later.
Mike, just a little bit on the role of the broker, because you talked there about obviously the service issues with the insurer directly. So if you're experiencing those service issues as a business, you've got insurance through an insurance company, but by using a broker like RiskBox, what sort of powers and levels of support can the broker provide in that situation?
Yeah, so we can obviously manage expectations. We can chase the insurer. If we need to escalate things, we can circumvent certain people to get things done. And obviously the nuclear option sometimes is if the insurer is just not either able to provide the service or got the competency to do what they should do, then we can obviously look at other different insurers for such things. So there are always options on that, which is a lot more difficult, particularly if you go direct. Yeah,
I think it's having obviously access to your knowledge and expertise, and also your power in pushing those sorts of things, isn't it?
Yeah, I mean, as an analogy, if in my personal life or something, if I've got an issue with a supplier or something like gas or whatever, I'll probably, bear with it a little bit, and it'll have to get quite a high threshold for me to stand up and complain. However, if it was, I don't know, my mum's gas bill, that's it. No, instantly that's it. So I find that it's a lot easier to complain on behalf of someone else than for yourself.
That makes sense.
So,
good analogy.
So what's this mean for agencies anyway? It means that we have seen increased premiums, which means that we're basically marketing every single insurance renewal every single year to make sure that it is actually competitive. So we're keeping insurers honest. We are finding tougher terms, and sometimes that's just going to be the way it is. So if, for example, if a client's in a poor financial position, you might find that if they've got directors and officers liability, an insolvency exclusion will be applied, and that would just be across the market. So things like that might happen. You will find, and this is specifically, again, going back to the tech side, illogical decisions. We've got one insurer who we use quite a lot, who they insure offices, so they insure your equipment, they insure your liability. And they had, for a period of time, a blanket: we will not touch anyone who hosts anything whatsoever. Doesn't matter if it's physical. No, if it's with Amazon, it's still hosting. We can't do it. Which does not make any sense at all, because there is no actual physical risk there. There is no actual liability risk. But what's happened is someone on a pick list has seen that that's a problem because of when there is physical hosting and you've got the higher fire risk. But because they are on a chatbot type thing with certain different people they refer to, it's computer says no, computer says no, computer says no, computer says no, even though it's absolutely bonkers. We've got that sorted now, but we had to obviously go quite a bit higher to say, yeah, I think there's some training needs here. Yeah. Again, that's not something you can do direct. You need to sort of wheel in the horrible me or my colleagues to do that for you. But it's obviously the way it gets done. Service is slower as well, and they're understaffed. You do not get the So over the last few years, again, this is a race to the finish. You'll find that the actual quality of the underwriting has gone down because they're not trying to train as many underwriters. They're trying to train more data processors. What it means is when you've got something complicated or slightly outside the box, instead of 20 different people who can answer your question, there's one. And that one person has got to take all the referrals from the other 20. So there's a massive bottleneck. So it means that, if you do certain things such as app development, for example, with certain insurers, it's going to take a long time to get, questions on US contracts answered, whereas it shouldn't do. It should be a quick, simple, because quite often we know what the answer is, but we need to get it signed off. So that can be frustrating. So you have to appreciate that it can be slower. And again, increased claims scrutiny. That's beginning to get better now, though. The last 2 or 3 years, it's been a nightmare, and we've had to fight a lot more for things. But touch wood, we've found that it seems to be turning a corner, which is good. Okay, so as I say, we deal with agencies across the UK. We've got, some with overseas presence, but generally UK. They're pretty homogenous, so their needs are relatively simple. And there are some core insurance covers that we discuss with them. 3 of them we will touch on in a little bit more detail shortly. But the ones we generally will find an agency will have is professional indemnity. And that's one of the ones we're going to touch on in a minute, because that is probably the most crucial from an actual risk perspective, because that is covering you for any mistakes in the work that you provide. Then there's the office package, which most people take because they legally have to, because if you've got employer's liability, so if you have more than one employee or more than one director on a limited company, or you have any employees, legally need employer's liability, or you can get prosecuted and fined. So that has to be ticked, and that's not normally expensive. Then there's the next ones, which are ones that we recommend all agencies should have. Directors and officers liability, that's another one we'll touch on shortly, because that protects your personal liability. And cyber and data insurance, which is obviously evolved and changed so much over the last few years. And as we said before, we're seeing a lot more incidents now. Other things that's worth having, cybercrime, that covers your own funds from things such as social engineering. So the actual, your own money or your client's money, if that was to either get hacked and transferred elsewhere, or you fall for a social engineering scam, transfer money away, that covers things like that. Legal expenses, that is good to have and normally can be put on an office package. It is not a panacea. It does not do everything. If you have anything really complicated and important to the business, you probably are better off getting a decent solicitor. But sometimes for straight things such as, like, I don't know, debt collection, that can be quite handy. It will step in and do some of the basic legals for you. And then there's some that are very specific about what you do. So producers indemnity. So if you're a film or TV production company who do large productions, that is essentially a sort of a reshoot type product. If you're not doing big video productions, there's no point. If you're not doing any, there's definitely no point. But if you're not doing big ones, there's no point, because you would take that stuff on the chin. Event liability and cancellation, unless you are running events and so forth of a certain size, again, not necessarily worth having. So there is a trigger point. And say for group travel, if you're not going to be traveling overseas as part of your business, then what's the point in having the insurance? So there are things that are going to be specific for it. And then the last one we want to touch on here quickly is when you're involved in mergers and acquisitions, is transaction liability. This used to be very, very expensive, but now there are some insurers that will do this at a very low starting point, which makes it viable for agencies. We are, I believe, Paul, we're potentially looking at this subject in a bit more detail, maybe coordinating this with personal guarantees and due diligence as well regarding insurance. So watch this space on that one.
Yep.
Okay, professional indemnity. So this is the key one that we believe agencies should have. And additionally, this is the one that varies the most. So you can find that you can pay for a professional indemnity policy with all different insurers, and you can get the very, 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 very good, and you can get the absolutely awful, doesn't cover you for everything stuff. And quite often there is no difference in price. It is just a case of knowing what you're looking for. What it does, it will generally pay to defend you against any allegations. So it can be as we'll see with some claims examples later, it can be completely spurious. There could be absolutely no merit in the alleged action anyway, but you still have to defend it. If you were to lose it, it can pay for the damages awarded against you and the costs, if their legal costs were awarded against you too, or if it's a case that a settlement is negotiated, then the settlement can be part of the claim too. That's sort of what that pays for. It's a defense policy for alleged errors, omissions, and other things too, such as allegations of IP infringement, allegations of defamation. Breach of confidentiality is a big one. So obviously you're working on, as an agency, you're working on a campaign. It's got to be top secret until X day. And for whatever reason, it gets out into the public. Well, you've breached your confidentiality and you can get sued. And the key thing with professional indemnity for agencies is you can get full breach of contract cover if you go with the right insurer. What that means is that you do not have to be negligent. So you sign a contract with, as an agency, with your client, agreeing to do these 10 things. You do your best you can. The clients may be giving you stuff late. For that reason, you cannot comply with the contract. Technically, you breached the contract. The client's not got a lot of money. They see it as an excuse to try and get out of pay, and so therefore they'll sue you for breach of contract. A normal traditional professional insurance policy, a professional indemnity insurance policy would not cover that. However, one with full breach of contract will. Again, to get a policy including that usually doesn't cost any more than one that doesn't. It's just a case of being, smart and looking for the right thing. Why do people have professional indemnity? There's not normally a legal requirement to have it, particularly in the agency industry. Unless you're in the agency industry and you're, say, FCA authorized, you're not going to need to. However, it is very frequently a contractual requirement. It's, you'll see it on tenders, you'll see it on all sort of documents where it'll say you need to have professional indemnity. But even if it didn't, that's the biggest area where we see problematic claims. That's what we'd suggest you have. It's not expensive generally, unless you're doing large US jurisdiction contracts, or you're doing app development, or you're doing your own hosting. It's not going to be expensive. It's generally still, even though you do get claims, it's still seen as a relatively low risk to the insurer as an agency. And a top tip, and I will bang on this on blogs, I will bang on this on any possible way that I can: never, ever, ever go direct. They are not your friend. They are not allowed to advise you. So if you're picking the wrong thing, they can't tell you. They can't say, oh, by the way, you need that, otherwise you're going to get sued, or you need that, otherwise you're going to get fined. They can't tell you. And what you'll find with certain insurers I won't mention is that they will keep you, and your premium will go up and up and up. The cover you'll have got from the start will have been a watered down version because you don't know the difference. We'll pick one example. So you got an insurer who everyone will know. You go direct, you'll get the light version. You go through the worst broker in the whole of the country, you'll get better cover, and it'll cost the same. And it's not illegal. Whether it's moral, that's a different matter, but it's not illegal. So they're allowed to do it, and it just is the bane of my life. Though when obviously when they ask us to review the stuff that's direct, it's great because we generally can just say, yeah, just appoint us and we'll get it all sorted. Anyway, I'll get off my soapbox.
Right, just before we finish on professional indemnity, a number of our clients will be in the app development game. Can you just touch upon that bit a little bit more in terms of professional indemnity? Because obviously that's often higher risk, isn't it, in that sort of field? Yeah,
and sometimes it's not. Sometimes it's more of a perception. So it's like same as, like, say, games developer. It ticks the box, and the insurers will see it as a red flag, and then they have to ask further information. And if they're not necessarily very well trained as an underwriter, they won't quite understand what the risks are. But things, some examples will be for app development. Quite often they're complicated projects. Yeah. They're not simple and straightforward. Yes, we're going to do this in a couple of weeks. They're quite complicated. They're quite hard to actually cost as well, because the app development company might know how to make the app, but the client doesn't necessarily. So they will expect this magical thing to suddenly happen. They don't appreciate how much work can be to just tweak one little thing. So there's a lot of confusion between the two. And there's also other things such as, for example, IP issues, licensing and so forth, depending on what sort of thing that's being done. So there's all sorts of different stuff within an app developer risk compared to a straightforward agency doing, say, branding or you know, marketing campaigns and so forth.
Yeah. So what's your advice for those app development companies? Obviously, get the right advice, speak to a broker.
Yeah. And as I say, I'm reticent on talking about different insurers, but I'm going to have to, if you are with Hiscox Direct as an app developer, be sure that they know what you're doing, because they generally don't like app developers. Now, you might have something where they've not asked a question, do you develop apps and so forth? However, the laws change a little bit and you're supposed to tell them, you're supposed to tell material facts. So something like that theoretically is a higher risk factor and you should tell the insurer that, but you're not necessarily going to know that. So what it means for yourselves is that if there is a claim, it might be okay, but then again, it might not. They might try and use that to try and get out of paying a claim. It will totally depend on the situation. But if you're an app developer with Hiscox, just be doubly sure, get it in writing, make sure that they have said, yes, we know that you are doing app development.
And also, I guess it's about getting the core commercial contracts between agency and customer right in the first place as well, isn't it?
Definitely.
Yeah.
Cool. Next one, directors and officers liability. So professional indemnity, we see most agencies will have. Directors and officers liability, we see less so, and it's something that's usually purchased during their journey as an agency. For us, it's probably one of the most important areas of cover, and anyone we deal with will have had at some point a directors and officers liability quote, because we don't want to be sued for not telling you about it. So you're a limited company, the limited company gets sued, worst that can happen, it's rubbish, but it goes under. But your home's fine, your savings are fine, all that stuff's fine, you're okay. Now, if you are sued as an individual, it doesn't matter if you're a limited company. It's against you, your assets, you know, your liability is technically unlimited and your assets are theoretically on the line. So directors and officers liability will step in. And the key sort of difference here is that your professional indemnity will protect you for your services you deliver. So if you're sued for the services going wrong, that's your professional indemnity generally. Whereas the directors and officers is about more how the business is run. So it covers you for what's called an alleged wrongful act. And there's, you know, different insurers will have different lists of what they are, but they would be things such as allegations of misrepresentation, for example, allegations of trading insolvent, which is one of the key things that's been on the rise really, is that with things such as CBILS and so forth, there are a lot of agencies who might be trading who are only solvent because they've got this loan that's going to be pulled, and therefore if they suddenly go under and say, well, we're not going to pay that loan, were they trading insolvent? Were they not? It's subjective, and it opens up to potential actions. So things such as directors and officers liability will step into, in the same way as professional indemnity, to defend and then pay damages and costs where allowable, should you lose. It also includes, sorry.
The danger is that clients try and take an opportunity, don't they? So they're maybe struggling themselves. They're looking for angles to, you know, make a claim for no particular reason. You know, they see on your balance sheet that you're potentially insolvent, or they hear that you're insolvent. Obviously, balance sheet is publicly available. Their gripe could be about something completely different, but they see that as an angle to attack you and make a claim. Absolutely.
Yeah. And again, like professional indemnity, there is no legal requirement to have it. It's entirely up to you. But what we do find is that as soon as there's any form of investment, it's usually requested. And that might sound a bit sort of counterintuitive why that would happen, because hang on a minute, if an investor's going to sue the company, why would he want a policy to defend that? But the reason is, if there has been a misrepresentation, they take action and win, they can get paid out. Whereas if they take action and win and they've got no insurance and say no real assets, they're not going to get paid back. So if they've invested a lot of money in, they want directors and officers liability in there just in case. Again, same with NEDs. If you're going to sit on the board of someone else's business, you know, you might have limited control, but you could get drawn into something. So you want to make sure that they've got directors and officers liability that you can rely on. And sort of as a quick aside, directors and officers liability will cover every single director, every single person in the management, anyone who does anything that a director would do, because that's what's called a de facto director.
Yeah.
Also, as I say, people like NEDs and so forth, it will cover automatically. You don't have to add in people, take them out or whatever. It covers them all.
So what you're saying is it's not just limited to registered directors as per Companies House. It's anyone that's taking on the responsibilities of a director and acting like a director. Yeah.
Exactly. And we've had plenty of claims where that's the case. And again, I mean, this isn't a sort of cover that you generally will get direct. But if you were, then these are even more confusing policies. So a lot of people wouldn't even know that it wouldn't just be the named directors. It's not too expensive for the insurance, providing that you made a profit, you've got a positive net worth, and you're not making redundancies. If those three things, then it should only be a few £100s to have a policy. If that's not the case, then it's a more complicated procedure and there are less insurers and the premium will be higher. But that's purely because a lot of the claims will come from companies that are performing bad financially. Yeah, so the tip we've already sort of touched on. By the way, these slides Paul will share afterwards. So there's a few blogs that you can link to if you want. I'm obviously not going to click on them now. Okay, and cyber and data insurance. So this is, obviously the newer area, and this is where we probably get the most questions. Like directors, I like professional indemnity. This varies quite a lot between insurer. And it's not just the insurance, which is the key driver here. So there is another insurer, for example, who provides some decent insurance cover in theory, but they don't have a 24/7 response. So if you were to get hacked on a Friday night, you are not allowed to incur your own costs and get paid back to prevent the situation escalating, but at the same time you can't contact them to get their permission to incur costs. So that doesn't work. So we don't use that insurer. But how would you know? It's only because we have to scour these things and go through detail to find that out. Anyway, cyber and data, it does two things. It's what's called first party and third party. So third party is just liability. So it covers your cyber liability. So things such as losing data, you get sued for that, or accidentally transmitting a virus, which obviously affects someone else's system. That's third party liability. That's cyber liability. But then you've got the first person stuff, which is your own financial implications. So that would be the cost for yourself if you get hacked, having to find out where the hacks come, having to check what data is being compromised, fix any security flaws so that doesn't happen again. But what we found the most useful when it's come to the claims is that it actually includes your own business interruption. Now, where that's important is if you were to get ransomware, it's not going to be solved straight away. You're not going to be back as you were 2 minutes later. If you get ransomware, it's a complicated procedure. It's not simple. It's not straightforward. You don't know what's been taken. You don't know what's been harmed. You've got ransomware to pay, which might take you a bit of time to get hold of. That happens. You're going to have to talk to your clients. Some clients will understand. Some clients will be okay. Some clients will not be. So you'll have the period of time when you're not able to deliver services where you can lose revenue, but you also find you'll probably lose some clients as a result. Now, the business interruption under this can pay for a certain period of time, depending on the insurer, for what you would have earned for those clients. And we've used that in the past. And obviously that can add up because, some clients are worth more than others. Anyway, that's sort of what it pays to do. Why would you need it? Again, GDPR does not mean that you have to have insurance. Doesn't mean it's not a good idea. GDPR does not enforce that at all. But we are seeing more claims, and we are particularly seeing more claims in ransomware. So when people think of cyber and data, one of the biggest pushbacks we see is that they say, well, we've not got much personal data, so we're not at risk. And yet, maybe that's the case. So maybe your data risk isn't huge. But for us, the data risk is actually the lower part. For us, the real risk is the cyber part. It is the ransomware. That's where we're seeing the pain. That's where we're seeing the big claims. That's where we're seeing people phone up and saying, oh my God, my business is gone. And it's like, no, you're going to be okay, but it's going to be painful. So yeah, cyber, not data. Data's still a risk. Data's still there. It's still a very useful cover, but cyber's the one where this is really going to hurt. Okay. So we're going to quickly fly through, just check the time, fly through some quick examples. We're not going to go into too much detail. And these are just sort of to illustrate what can go wrong. If anyone has any questions on any of these things afterwards, then feel free to get in touch. They're all based on actual genuine claims that we've had to deal with. And of course, they're going to be, changed a little bit so that to protect confidentiality. Okay, now this one is actually quite common, maybe not to the size of the claim that it is, but we probably will find a nightmare client claim every 2 or 3 weeks. And they will be quite often clients that will be, so for the agency, their clients will be financially struggling, and they will, for whatever reason, in fact, we'll take a quick sidestep here. So if you obviously work with the guys at MAP, and they will teach you that, the last thing you want is to be paid at the end of the work with a big invoice that someone's going to find any excuse not to pay. Well, one of the excuses they can quite often find is, oh, you haven't done the work that we want, so therefore, if you want to chase us for that final 30 grand invoice, that's fine, but we're going to sue you because you haven't delivered X on our contract. And we find that a lot. We find that a lot because clients might be financially struggling, and we also find it a lot because clients quite often don't understand what an agency does. They quite often think the things that are being delivered are actually a lot more simple than they are, particularly when it comes to anything sort of tech heavy. So in this example, what happened is our client delivered an e-commerce website. The e-commerce website was functional, it was working, it was bringing the client revenue in, but the client didn't like it. They had a big bill, they wanted to get out of paying it. Therefore, they said, okay, well, we don't like it. It doesn't do what we want. Yeah, we're not going to pay the final invoice. In fact, we're going to sue you. And what we've done is we've got another agency to build us a new system, which we've gone ahead with. Now, despite the fact that 18 months down the line after saying that they hadn't, and that could be proved, it was still expensive, horrible litigation where in the end, after a couple of years, insurers, the end client and the agency just decided we've had enough. And that ended up costing the insurer 250 grand. And it cost the agency a fair bit as well, because there was a proportion where it was the debt collection aspect. So yeah, clients, yeah.
So they could have been insured on the debt collection as well. That would have been the hypothetical advice there.
Not necessarily. So so you can have credit insurance, and I have not seen a single agency that has got credit insurance. And the reason for that is, one, it's expensive, and two, the clients you actually want credit insurance against are going to be the ones that you won't get insurance for. And if they have to obviously go under for that thing. What you can have is the thing we touched on with the legal expenses, which is debt collection assistance, and that will just pay the legal expenses to take that to court, but that won't pay the actual debt itself.
Oh no, yeah.
So, but yeah, so the legal expenses could step in for that if that was in place.
Yeah.
Then we've got another one. So this is just a production company. Well, this wasn't a production. This was a normal, straightforward agency that won a production contract. Signed the contract, great. Didn't read the contract. The contract was what's called a PIBS contract, which is specific to production. And it said they needed producers' indemnity for a huge amount, which is going to be very expensive, particularly in relation to the size of the contract. But they signed it. There was no negotiating around it. And they suddenly had a large bill that they didn't need because they didn't actually have a risk for that. Usually for things such as producers' indemnity, you will have one big shoot, which this will relate to. But this was a case of collating, like, say, 600 videos together. So if they weren't able to have 5, 6, 7, or 8 of them, it made no difference whatsoever. But they had to have the insurance because it was under contract. So that's why a lot of the time we say that we would rather, our clients would actually speak to us a lot, because we can go through, these sort of things beforehand and say, look, you don't need this because of that. Here's something, send it to your client and say, this is why we don't need this. And you'll be surprised, even the biggest companies, in fact, the biggest companies are generally better at agreeing these sort of tweaks and amendments, ironically. But yeah, so be careful what you're signing. Direct insurance. I could go. We could do a Netflix series on this. I would be more than happy to go on it. So our client was, they did a lot of physical stuff. So physical events and experiential stuff. They then decided that COVID happened. They had to pivot. So they decided to do more stuff digitally. They phoned the insurers up. They explained exactly what we're trying to do, or best they could. But the insurer at the end of the line decided to answer the questions for them and lead them down different directions and didn't quite get a complete picture of what they did. That was the insurer's fault. Cue a massive claim, 1.2 million. Yep, that's the exact amount. They advised insurers of the claim, and insurers rejected it. They said, we didn't know this is what you were doing. So at the time they were a direct client, then we spoke to them, they appointed us, and we got hold of a audio recording of the conversation where we're able to point out that shouldn't have been said, that shouldn't have been said, that shouldn't have been said, that is your fault, insurers. And as a result, now that has been sorted. But yeah, that one still gets me angry because it's just taking advantage of people. Social engineering, we see a lot of these, and they are getting more sophisticated. This one was in the middle of a trail between the agency and the people they were going to pay their supplier. They had the conversation was going on the email. They sent the invoice to be paid, and then the emails were stopped both ends, and then the hackers then interjected within the trail, so it looks like it's carrying on, and said, oh, whoops, by the way, that's the wrong bank account, we've just changed, it's this. Because it was within the email trail, it's not a spam, you don't expect it. And the payment was made, it went to, I think it went to Turkey, and then it went everywhere, and wasn't recoverable there. Fortunately, the insurance stepped in, and that was, as I say, that was 50 grand. So it wasn't a small payment. And that happens a lot. And no matter what sort of training and stuff you put in, it can vary so much what people do. And there are so many tricks that people that hackers and so forth will try to use. And unfortunately, we're people, and we are the weak link in any IT security system. Fly through this one. So this was a company, this is a directors and officers liability claim, and one of the directors was a director of lots of different businesses. One of the businesses, which wasn't one that they were complete control of, they were like almost like an NED on, that went under. And then the creditors of that came against the director, claiming that they were giving preferential treatment to the other businesses within the group when it came to the payments and so forth. It was spurious, but we see in situations like that, any way that they can get more money into the pot, that will happen. And in this case, this is what it costs to defend, and it's been successful. So it wasn't small. So when directors and officers liability, they're claims that don't happen very often. So if you were to look at, I don't know, professional indemnity, you might get 50 professional indemnity claims to one directors and officers liability. But the directors and officers liability claims are bloody nasty. They're horrible. They're expensive. They're emotional. They're not nice at all. So yeah, you need to bear that in mind. And that's why we make sure that people know about directors and officers liability.
I think that's a particularly interesting one, Mike, that idea of like the group of entities that you might not necessarily recognize that with that kind of insurance, that as a director you could have multiple companies, and it's that connection between the companies that could end up being your Achilles heel, isn't it?
I mean, and on that one as well, so not everyone knows that. So that wasn't part of a group. It was like connected, but it wasn't part of a group in the normal sense. Yeah. And under directors and officers liability, you can be covered for directorships elsewhere. Yeah. Now, some of them will automatically cover it, and you don't need to do anything. And some of them you have to put it in writing. Right. So, for example, I've been on a committee of an association for years. I'm not anymore. But what I had to do for my insurance was I had to make sure that I put in writing that I wanted to sit on that board to whatever reason. So it was documented that it was accepted by me, that I wanted to be on that and so forth. But it meant that what's called the outside directorship extension was covered. So if I was sued in my capacity over there as a director, I would be covered.
But it'd typically still be paid by one of the limited companies that you're a director of, wouldn't it? Not by you personally, the premiums.
Oh yeah. The premiums are paid by the business. Yeah. So,
But they could still cover those directors for other business interests.
Yeah. So with the outside directorship, all we would suggest is that, if you're not sure, give us a shout, but generally we would try and make sure that everything's documented in writing. Anything that you are going to be a director, or any entity that you're going to be a director of that's not part of the key group, get something in writing between the board and to say that they want you to sit on that committee. It might be, I don't know, an industry association to promote well-being or something, but there is a reason why that is good for the business. Get that in writing. It ticks a box, and it means that you're should be automatically covered. If you've got a good directors and officers policy, should be automatically covered should something happen. And then the loss adjuster nightmares. Well, there are a couple of exceptions, but I would say the majority of loss adjusters are nightmares. Insurers are not your friends. Loss adjusters are definitely not your friends. They are there to do exactly what it says. They're there to adjust the loss. That doesn't generally mean they're there to make sure that you get paid out everything you should. They're there to adjust the loss, and they are effectively agents of the insurer. So if they can find ways to reduce claims or get out of claims, they generally do, which is why 9 times out of 10, if there's a loss adjuster visit, we want to be there so that we can challenge, whether that's at the moment or challenge afterwards, but make sure that you don't get poor treatment by them. So in this case, it was a break-in in Manchester. There were the loss adjusters said that it wasn't covered because of a certain lock on the door, but the clause they were referring to didn't actually apply because there were laptops that were stolen, so there was no clause on there at all. They might have known that and tried to get away with it, or they might just have been incompetent. Either way, they tried to get out of a claim they shouldn't have tried to get out of. It took several months, but the insurers eventually paid exactly what they should do because they were forced to. But again, if you don't know these things, how comfortable are you going to be to challenge a loss adjuster? When they say, oh, because of this X clause 166.2, you cannot be covered. It's not an equal position. So yeah, that's why you will the horrible people out, i.e. me and the other guys at RiskBox. And I think this is the last one. Ransomware, as I say, this happens all the time. I had a tiny client in the e-commerce sector. They did some stuff for various different other e-commerce businesses. They get hacked. They get hacked just before Black Friday. They're out of action for about 4 weeks. It was that serious, the hack. The ransom itself, whether morally it should be paid or not, insurers still pay them at the moment. That will possibly change because there's stuff going through the US courts at the moment, but at the moment they still can be paid. But by that, it means insurers will pay someone, who'll pay someone, who'll pay someone, who'll pay someone, who'll pay someone, who eventually pays the ransom. So it's, sounds as on the level as it should be. But it does get paid. There was obviously a lot of money spent trying to find out what's happened, where it's happened. Is the threat genuine? Because it might be someone said they've hacked you and put ransomware, but actually it's not. They've not really sophisticated. These guys turned out to be Eastern European, very, very professional. So it was, yes, it's definitely genuine. And then there's other questions like, if we do pay that, will we get our systems back? So again, insurers are their team that they sent in will be checking to make sure that those hackers will do that, because they have reputations. So say, yeah, these ones will do what they say. I mean, if you take another analogy, if you look at kidnap and ransom, don't get kidnapped in Europe because you're more likely to end up dead. Whereas if you get kidnapped in, like, say, someone like Colombia, where you're more likely to get kidnapped, you're probably going to survive because it's a business and they don't want their reputation being damaged by killing the hostages.
Great advice, mate. Big question today.
But yeah, so this one was one of the ones where of that 500 grand, you would be probably looking at half of that was business interruption costs. So again, that's why that is such useful cover to have. There's one more. This happens a lot when agencies grow, and it can be a bit subjective. But as you grow, you pick up clients and so forth. You got a team to deliver it, and then I don't know, the team suddenly disappear. Then you can't deliver it. You're instantly under breach of contract. You get claims. And we had one where there were 3 separate claims because that happened. They'd done well, they'd grown, they'd brought lots of different people in. And then for whatever reason, the team was not happy and a load of them left at once. As soon as that happened, 3 clients, one after the other, all threatened to sue for breach of contract because what was being asked to be delivered wasn't delivered. And that one was in the app space. So again, that's another sort of red flag on the high risk thing as to why it's more difficult, because if you haven't got the people to deliver these things with apps, you're more likely to get sued because there's more expectations as to when things need to be delivered and what they need to do.
Yeah.
And yeah, we always say thank you for the images we use on Splash, but we like to mention who the people who've given us the images are. Not that anyone notices, but want to give credit. And that's that.
Perfect. That's
45 minutes.
Yeah, thank you. Great. Really, really useful. Obviously, as you say, we'll share the slides after. There's some links in there as well to some additional content, but we'll also provide RiskBox's contact details across email, website, social media as well. So if there's anything that you want to follow up with Mike, you'll have his details direct. Obviously, if you want to discuss anything with Map or people look after you at Map, then please do so. And many clients are already working with RiskBox. So, we've got that trust. I think I've known Mike for the best part of 9 years now.
Yeah, we're getting old, aren't we?
We are we're getting older, yeah. But I'll share all of this within the WhatsApp community across social media and email as well. So you'll have everything that you need to follow up with Mike. All right. Thank you, Mike.
Cheers. Take care.